the fastest growing grocery chain in America, targeting 800 new U.S. stores by 2028, and the NNN properties that come from that expansion are backed by one of Europe's largest private companies. If you want grocery anchored net lease real estate without paying Publix or Whole Foods prices, Aldi is a category that deserves a hard look. Here's what you need to know. Aldi NNN properties trade at 5.25% to 6% cap rates, meaningfully wider than QSR and pharmacy NNN, which reflects both the private credit profile and the larger building sizes. At 17,000 to 22,000 square feet on 2 to 3 acres, these are bigger boxes than dollar stores or QSR pads. Entry prices run $4 million to $8 million. Lease terms are typically 15 to 20 years initial with 4 5-year renewal options. The corporate guarantee comes from the U.S. subsidiary of Aldi Süd, one of the world's largest private grocery companies. While Aldi doesn't carry a public S&P rating, the parent company's scale, hundreds of billions in global revenue, gives investors significant confidence in the guarantee. Aldi's investment thesis starts with growth trajectory. This is not a mature, stable chain that's been around forever. This is a company that has doubled its U.S. store count in the last decade and is planning to accelerate from there. That aggressive expansion creates a BTS pipeline of fresh, long-term leases on purpose-built stores rather than forcing you to buy older deals with shorter remaining terms. The discount grocery model is recession resistant. Aldi's price positioning means consumers actually trade into Aldi during economic pressure rather than away, and the European parent company has demonstrated multi-decade staying power, operating successfully in competitive markets across 20-plus countries. Aldi leases are typically absolute NNN with 15 to 20-year initial terms. Aldi covers all operating costs, including roof and structure. Rent bumps of 5% to 10% every 5 years are standard on newer deals. Corporate guarantee from the Aldi Süd U.S. subsidiary. Some Aldi locations come as anchor pad positions in shopping centers rather than true freestanding NNN. The risk profile is different for those deals. Always confirm you're looking at a freestanding pad if your goal is pure NNN passive income. 3 specific things to watch with Aldi. First, the building size is the largest in most small box NNN portfolios. 17,000 to 22,000 square feet means a higher land and building basis concentrated in a single asset. If Aldi ever vacated, this box is harder to release than a 10,000 square foot dollar store or a 2,200 square foot QSR. Know your releasing universe going in. Second, some deals are anchor pad positions in shopping centers rather than freestanding pads. Shopping center deals carry co-tenancy risk. Know exactly what you're buying. Third, Aldi is private. No public financials. The parent company's scale is well established, but you're relying on reputation and market data rather than SEC filings. The grocery competition landscape also varies significantly by market. And Aldi, in a market with heavy Publix presence, has a different operational risk than one in an underserved suburban corridor. Aldi NNN is one of the better cap rate opportunities in the grocery net lease category, and the expansion pipeline means new deals are coming. I'm Ryan Solberg with MaxLife Commercial. If you want to look at Aldi NNN properties in Florida, let's talk. Visit maxlifedevelopment.com or call 321-586-2121.